Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Thursday, April 3rd, 2025. I'm recording this video early today because I'm busy again for the rest of the day. It's about 10:30 a.m. Eastern Time. Today begins with the first headline: my crystal ball correctly predicted higher tariffs than expectations. If you are a subscriber of my YouTube channel, you may have come across my post yesterday, which was referring the day before. On Tuesday, I said, my take is the tariffs will be more and higher than current expectations because Trump's end goal is lower rates, which can happen when Mr. Market is losing his lid. From that same post, I wrote, I haven't changed my stance that this is the first time, perhaps in several decades, when the Fed will not come to the rescue right away. Powell knows about PE ratios and doesn't like the asset bubble any more than Trump likes high rates. I think we enter this storm tomorrow. I thought the tariffs were being released before the market closed originally. That's why I have those edits in there. But anyway, yeah, so Thursday, which is today, entering the storm, and we did. So much so that the S&P 500 is now currently in correction territory, around 11% lower than the all-time high. The S&P 500 currently sitting at 11.4% down from its all-time high, and on the day, a whopping 4% loss. That is a very large move for one day in the S&P 500. I wanted to add my third headline today: small caps entered a bear market. We're down now 22% from the all-time highs. This is a chart of IWM, the Russell 2000, from intraday top. We are down 22.35% right now. This is considered to be bear market territory, which means it's going to take something to get it to go back up. Right now, we are going down, it appears. There's a lot of charts to talk about. We'll get to those in a moment. Before we do get there, I want to go through the community topics. I'm curious what moves, if any, are you making today? Did you buy anything? Did you sell anything? I had some calls on a fund called SCO. It's a short crude oil fund that it is just like a tiny position, but it tripled, and I sold that today. That was one move that I made. So what did you do today? Are you going to buy the dip? Comment below. Coming up tomorrow morning, we have the big jobs report, the employment report. Again, this triggered the SOM rule all the way back in June. If this adds fuel to the fire, watch out below, everybody. Stay safe out there. Believe it or not, no major changes still in the daily reminders. I still encourage you to watch Macro Update to 1125 to hear me explain them, and watch Portfolio Update to 1125 to hear me explain my crystal ball readings and portfolio, minus this stock that I recently bought around $60. Moving on to charts, SPX, the S&P 500, I want to go into a few little other details. We have this trend line that we had bumping on April of 2024, August of 2024. The market was kind of wondering, hey, are we gonna stay above this line and get back up to new highs? Maybe go to 7,000? Is that the next stopping point? Instead, we jumped over the river today. This is very, very bearish. The bulls do not have a lot of strength here. Sometimes Mr. Market needs a black swan event to dive down, and sometimes it needs something to get it going back the other way. And I think that's where we're at now. I think we're clearly in a very bearish territory, and I think it's going to continue downward, but that's just me and my crystal ball. As of the recording of this video, I'm surprised the VIX is not above yet the intraday candles of earlier in March, when we peaked out around 2960, but there's certainly room for the VIX to continue moving higher. A lot of the times with momentum, when something starts going a certain way, it keeps going that way, can even accelerate going that way, but we'll see. Another way to look at this is that there's still more room for the VIX to continue higher. In fact, I think there's an odd amount of fear of fear. In other words, maybe people are still a little overly optimistic. I mean, honestly, the VIX not popping higher here while the S&P 500 drops 4% in one day. Oof. This may continue a lot lower. Again, just my crystal ball. When the 10-year Treasury note yield drops, it's good for long duration bonds like TLT, and we have a pretty darn clear head and shoulders top that has now played out to the downside, suggesting that there's a good probability now, based on this pattern alone, of the 10-year note dropping to 3.44%. This is not the only reason that I believe that rates will drop, but it certainly helps my case. My very large put position, I've put option contracts, which means I make money if it goes down, are doing pretty well today, with HYG dropping by 1.2%. That's pretty large for this fund. With junk bonds losing value, it adds to the weight of the market to actually continue lower. I think we're in one of those scenarios where you ain't seen nothing yet, but I could be wrong. I don't know. We could see a reversal in all of this. I mean, Mr. Market's crazy. I can't control him, but it's looking hecka bearish right now to me. Another chart pattern that really caught my eye today, SMH, the semiconductor index. This head and shoulders is now completed. We've broken the neckline today, suggesting that SMH has a good probability of going all the way down to $124. A chart that caught me off guard a little bit and surprised me, maybe it didn't surprise you or others, but DXY, this is the dollar index. This is how much the dollar is worth compared to other currencies. Tariffs increase the cost of imported goods, and it can push inflation higher, which can make rates more tighter. In other words, less of a chance of the Fed cutting earlier. Maybe like, okay, the Fed's actually going to strangle here. But the market's seeing the opposite, and that's confirmed in the Fed funds futures. Because as of right now, as I'm looking at this chart, we previously only had 3 cuts throughout the end of 2025. Now we have 1, 2, 3, 4 cuts throughout the end of 25. And then looking further out, a few more cuts potentially. Again, the further you look out, the more the bigger the grain of salt you have to take it with, because these things change on a daily basis. They can change pretty dramatically. But right now, that's the story. I suspect the dollar won't continue to fall here, but the other piece of this is that, Trump wants the dollar to go down, and believe it or not, and I mean, it benefits the government's ability to spend money, which is what all politicians want to do. They want to spend money on the stuff that they want to spend on. Let's, be honest here. But I think the economic slowdown and these tariffs are going to cause a bit of a rush to the dollar, especially as credit becomes more risky and there's a shortage of dollars. There's a need for dollars, and that can make the dollar go up. So I wouldn't be surprised to see a knee-jerk reaction go the other way in the dollar very soon. But that's really just a guess. Holy moly, I guess I should have pulled the trigger on... I should have waited to pull the trigger on my oil short. It's fine. I made lots of money on it, relative to the position size. A large red candle. Oh, and look at this. You got the 3 black crows, I think they're called. Larger red candles. This is looking also hecka bearish. Again, many traders are looking for that 65 level. If we close below there, oil may drop as low as $35 a barrel, which can easily happen when there's a clear economic slowdown coming. Friday, jobs report, really important. If unemployment, for example, let's play, devil's advocate. Ironic that I'm saying devil's advocate and saying the devil's advocate is unemployment being lower, but just because it goes against what I think is going to be happening. But anyway, if unemployment ends up being a lot lower, unemployment being a lot lower than expected, that could be like, oh, actually everything's perfectly fine, and maybe that'll give a boost to the markets. But it's going to have to, at this point, we need something to get the market going up now. Before we needed something to get the markets to go down, and now I think, again, we're on the other side of that coin. Another way to look at it, like the CNN Fear and Greed Index, I've talked about this in a number of previous shows, waffling now between extreme fear, fear neutral, maybe a little bit of greed, but generally going in, staying in the fear zone. To continue through the charts, it looks like this bull market in copper that I was talking about turned into a blow-off top very clearly at this point. And so I talked about this candle here being a knockout punch, and I said it was going down. I didn't even know it would go down this much this quickly, but copper is falling. And remember, guys, he has a PhD in economics. Gold remaining resilient at the moment. This likely has to do with the dollar dropping today, and if the dollar does reverse, I still think gold's going down from here, and I am still short gold, by the way. Believe it or not, I was actually ahead this morning in my short, even though we were above this zone. It's because the fund I have, GDXD, is actually the miners, and the miners have been not performing as well as gold. So anyway, yeah, just quick update on that. With all this chaos in markets, I think it is important to look at where Bitcoin is. What is Bitcoin doing? Currently, it's dropping a little bit, but it's not really doing anything, and this can be a good leading indicator. I think at this point Bitcoin would make sense to be dropping here along with general global liquidity, and it hasn't done so yet. Last chart of the day, EWZ, for some reason is up. It's one of my largest holdings, Brazilian ETFs. Again, it's amazing what can happen when you have things that are clearly very suppressed in their price, when money's trying to figure out where to go. Something that is clearly very undervalued, it can only go so low. This is an index of an entire country of stocks that produces something like an 8, or at one point it was an 8 or 9% dividend. I think it might be around 7% now. That's enormous. Compare that to that U.S. stock market, the S&P 500 yielding 1.3%. For that to be even, Brazilian stocks need to multiply by like 4 or 5 or something like that. So, even though it seems a little surprising to see Brazil stocks go up while the S&P 500 is down 4%, I'm not actually surprised. But what do I know? I'm just a guy with a crystal ball. And that's all for me and my crystal ball. I hope you enjoyed. Thank you for watching. Don't forget to subscribe, and see you next time. Robschild.